some things that I've looked at in real estate that I think are interesting. I've looked at Colliers a little bit recently. It's CIGI in Toronto and in the U.S. It's in the commercial real estate business, fourth largest real estate services business in the world. Get the other half of their revenue from investment management. So think about, some of these funds we talk about with these alternative asset manager folks. The founder still runs the company, has about 45% of the voting interest in what goes on there. I've had a very successful acquisition strategy in the past, and I think it's really quality business that, because of the concerns around commercial real estate, can get it at a better valuation than you would have gotten it in the past. Another company that I think is interesting, although very, very aggressive, somebody called Durham in Canada. They have basically gobbled up a bunch of the software that lawyers in particular use to close real estate transactions, reduces the amount of time that it takes to carry out all this paperwork by about, I think it's like 6x. I mean, goes from taking an hour to do the paperwork to like 10 minutes is my understanding. And because this isn't that complicated of paperwork, and it accelerates the lawyer's output very quickly, they've been able to take a lot of price. Hundreds of percents of price increase over the past couple years without meaningful churn from their customers. The issue with the business, though, is that it is tied to real estate transaction volumes. If there are not transactions going on in the housing market, then they don't make any money. And transactions have slowed down meaningfully because of the increases in interest rates and those types of things. Canada in particular has issues with its housing market, and Durham is overexposed to the Canadian market. So there are some concerns, and that's driven the stock down quite a bit. However, Matt Proud is the founder and one of the largest shareholders there. His company owns 15%. They bought back 20% of the shares outstanding in the last quarter, which you don't do unless you think the business has a stable floor up underneath it. So that's a business, again, it's been beaten down because of concerns around slowing transaction volumes and because they've been very, very aggressive. Also another acquisitive business that has lots of debt. This one has lots of debt on the balance sheet. Colliers doesn't have to the same extent. But if you believe, like their management does, given how much stock they're buying back, that they're going to be able to withstand this and kind of keep moving forward, then an interesting stock to look at. So those are the types of areas I'm looking at, folks, where management is not concerned at all based on the behavior that they're carrying out, and if you believe that the real estate market stabilizes, then you have some attractive valuations here.
What's the ticker on that one?
Durham is DND on the Toronto Stock Exchange, and then Colliers is CIGI in the US and in Canada.